You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, first day of August, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast is our live training room. So that one is reserved for our traders and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, when Michael joins us in about an hour, he'll walk you through step by step how to take the trial. Now, I know it's Friday, but take it today. This way we get your indicators up and indicating today. You'll have the weekend to get familiar with them. And then you'll be ready to rock and roll Sunday night at 6 p.m. Eastern, because that's when we go to business. Go to work. Yeah, you know what I mean. Stock traders, they wait for Monday morning, 9:30 a.m. Eastern. But as futures traders, we get to get our week started a little early. Futures market is open from 6 p.m. Eastern, Sunday night, until Friday afternoon at 5 p.m. Eastern. There is a 1-hour break each day from 5 p.m. to 6 p.m. So, this is the Friday session, but the Friday session actually began last night at 6 p.m. Eastern. Now, when you sign up for the trial, you're going to have access to the live training room, of course, but you're going to have access to everything else. We're going to treat you just like you were already a member, passport holder. And you'll have access to everything. The alerts, the weekly trading zones, the discussion group, everything. There's no credit card required. We want you to focus on learning the methodology and the strategy and how to use the indicators so that at the end of your free trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. And I do believe what you'll find over the course of your trial, if you show up every day, pay attention, and ask lots of questions, our rules-based strategy is probably the simplest thing you've ever come across. At first, it looks a little overwhelming. Oh my gosh, there's so many things, so many rules. There's only a few things, there's only a few rules. Once you learn the rules, then all you have to do is follow the rules. So, get signed up for the trial today. Again, Michael, when he comes on top of the hour, he'll walk you through step by step how to take the trial. Again, there's no credit card required. You do need a TradingView account to use the indicators. And he'll even show you how to take a free trial on TradingView if you don't already have it. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's two different ways you can join the afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. This is our 20th year anniversary. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. If you're new to our neck of the woods, it's a great way to get to know who we really are. In fact, thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips. And I'll let you know we've been around a minute. This is our schedule for each afternoon broadcast. Michael will join us at the top of the hour for a recap of what happened in the live training room this morning, and then we'll do a little live trading on the TradingView platform. But first, we'll dive into our daily devotional, which is where we start each and every afternoon broadcast. Now, the devotional that we're in right now, we're on day 3 of 5, and this is a tribute to Phil Robertson. If you don't know who Phil is, he's the patriarch of the Robertson clan. They once had a little duck show called Duck Dynasty. The topic of this devotional that Phil wrote before he passed, God is not dead. Now, the New York Times, well, they have a different thought on that. For a headline they published many, many years ago, some of you may not be old enough to remember that. There it was for the world to see, on display, front page, above the fold. God is dead. I beg to differ. Our scripture today is Galatians 5, verses 19 through 21, and I'm going to share it with you from the Message translation. It is obvious what kind of life develops out of trying to get your own way all the time. Repetitive, loveless, cheap sex, a stinking accumulation of mental and emotional garbage, frenzied and joyless grabs for happiness, trinket gods, magic show religion, paranoid loneliness, cutthroat competition, all-consuming yet never satisfied wants, a brutal temper, an impotence to love or be loved, divided homes and divided lives, small-minded and lopsided pursuits, the vicious habit of depersonalizing everyone into a rival, uncontrolled and uncontrollable addictions, ugly parodies of community. I could go on. This isn't the first time I have warned you, you know. If you use your freedom this way, You will not inherit God's kingdom. Again, that's Galatians 5, verses 19 through 21 from the Message translation. Murder, death, destruction. These are Satan's chief means of separating humans from God. Can't you see his work all around you? Just turn on the news. We've been enslaved by the power of the evil one, the father of lies, the murderer of all murderers. But look here. If Satan can't kill you immediately, he has other tools at his disposal. He'll imprison you in your own desires or use your intellect against you until you go down to death. Drugs, alcohol, illicit sex, greed, false beliefs like that New York Times headline, God is dead. These are among the tools that Satan uses to keep us in bondage, to keep us from experiencing the freedom of God's kingdom before we take our last breath. Paul is clear about the tools of Satan, the tools he calls the works of the flesh. Scripture is likewise clear about the primary influencer of our works of the flesh, our sins. As John wrote in 1 John 3:8, he who sins is of the devil, for the devil has sinned from the beginning. And his temptations toward sin aren't just random or willy-nilly. He operates a highly organized crime syndicate, a ring of demons whose only goal is to pull us toward desire and ultimately destruction. As Paul reminds us in Ephesians 6:12, our struggle is not against flesh and blood, but against the rulers, against the authorities, against the powers of this dark world, and against the spiritual forces of evil in the heavenly realms. Just look around. Don't you see Satan's influence at work around you? The entertainment industry mocks religion and celebrates perversity. Universities teach the death of God and Satan with scientific precision. Physicians and psychologists tell us that when we die, the lights go out forever. Sin, the works of our flesh. Can there be any question that Satan is alive and well in our country? And when you remove Christ from the public square, from courthouses and schools, when you bar truth from its institutions, should it come as a surprise that the devil steps in to fill the void? Thank you for that, Phil Robertson. We miss you. Let's pray. Heavenly Father, help us to turn away from the desires of the flesh that lead us away from you. Cleanse our hearts and renew our minds, that we may live in a way that honors your name. Fill us with your Spirit so we may walk in holiness, choosing what is good, right, and pleasing in your sight. It's in Jesus' name we believe and pray. And everybody said, amen. Amen and happy Friday. Everybody's been working for the weekend. Now what are you going to do with it? Hopefully I'll see you in church on Sunday. I'll be there Saturday too. Okay. Let me give you the numbers from around the world. If you haven't looked at the charts, you might want to sit down. Now, we've been talking about this for months, and, well, it's finally here. Get back to me later, Mr. Scam Likely. Okay. The Dow's down 436 points. NASDAQ's down 300. Now, for the Dow, that's just shy of 1%. NASDAQ is down 351 points. That's over 1.5%. S&P 500 is down 74 points. That's almost 1.25%. And the Russell 2000, our man in the street, is down 38 points. 1.75%. Just take a deep breath. It's going to be okay, I promise. Crude oil is down $1.59, trading 67.70 last. That's a drop of 2.25%. Gold is up $48.80, trading 33.9730 last. That's a gain of almost 1.5%. And silver, about time for a comeback, up 21 cents on the session, trading 36.92 last. Remember, when the price of silver moves $1, that's worth $5,000 per contract traded. In the Asian markets at the close, the Nikkei fell 270 points. Shanghai dropped 13. Hang Seng fell 265, which is a little over 1%. And in the European markets at the close, FTSE down 64, the DAX down 639. That's well over 2.5%. And the CAC down 225. That's almost 3%. Just shy. So it's been a while since I said this, but we had a red day in Asia. It was a red day for the UK. And it's a big red Radio Friday, first day of the month. First day of the month, that's when the funds typically load the boat. I don't see a lot of boat loading going on today. We'll get to the charts in a few minutes and we'll dissect exactly what's happening or what has happened. Now, technically, we've known the sell-off was coming for quite some time. In fact, we've talked day after day about how overdue it is. And I'm telling you that what we've seen today, that's just the beginning. We'll bounce out of here, but we're going to probe lower prices. I'm pretty confident. President Trump signed an executive order yesterday imposing new tariffs on imports from 68 countries and the 27-member European Union, set to take effect at 12:01 a.m. Eastern on August 7th. The new deadline replaces an original one that had been anticipated for today, when dozens of countries had been warned to strike trade deals or face steep tariff hikes. I gotta admit, I'm a little disappointed that he moved the goalpost again. But in all fairness, he's trying to give everybody the best possible opportunity to strike the best possible deal they can. But the bottom line, America is tired of being taken advantage of. You know, there didn't used to be a thing called income tax, or the IRS. Prior to 1933, the U.S. existed on trade tariffs. That was the money that kept the engine running in this beautiful nation we call America. And all Trump's doing is taking us back to our roots. A baby born in Ohio on July 26 has set a world record as the oldest baby ever born from a frozen embryo. Thaddeus Daniel Pierce was conceived from an embryo created and cryopreserved in 1994. Wow. Is that 30 years ago? I guess it is. By a lady named Linda Archer during an in vitro fertilization cycle. Now 62, Archer donated her remaining embryos after menopause through a process known as embryo adoption, in which donors have input on where embryos are placed and which are often handled by Christian agencies. Lindsay and Tim Pierce adopted the embryo, which had been stored for over 30 years, in a slow-frozen plastic vial. Archer previously gave birth to a daughter from the same IVF procedure. That daughter is now 30 years old and has a 10-year-old child. Since the first IVF baby was born in 1978, over 13 million babies worldwide have been born through IVF or similar technologies. In the U.S., about 2% of babies, 1 in every 42, are born using IVF. Well, that's the global news. How about the Wall Street news? Stocks sank today after President Trump officially hit virtually every U.S. trading partner with sweeping tariff hikes, while the June jobs report showed signs of a labor market slowdown. Finally, the left has something to cheer about, but this will be very short-lived. Trump said in a social media post this morning that the Federal Reserve Board should assume control as 2 Fed governors outlined why they broke with Chairman Jerome Powell on rates. I think the other day we said that was the first time that had happened in 30 years. The president urged the Fed board, which Powell chairs, to do what everyone knows has to be done if Powell continues to not support lower interest rates. Now, of course, today, Powell is crowing because he's wagging his finger saying, "I told you so." Yeah, well, here's the deal. Had you lowered the rates when the data said you should have lowered the rates, instead of having this grudge match with Trump, if you had done what every Fed chairman before you has done, follow the data, not the politics, then this news we had today about jobs would have never happened. It's just too expensive right now for companies to expand and create new jobs, because when they go to the bank to try to borrow money, the interest rates are obscene. Now, Trump's comments came just before Fed governors Christopher Waller and Michelle Bowman explained in new statements why they disagreed with Powell Wednesday and argued for a 0.25 percentage point rate reduction at the Fed's last meeting, which was this past Wednesday. Both Waller and Bowman cited worries about the labor market as a reason to start cutting again. Waller said in his statement, "I believe that the wait-and-see approach is overly cautious, and in my opinion, does not properly balance the risks to the outlook and could lead to policy falling behind the curve." Bowman added in her statement that the labor market has become less dynamic and shows increasing signs of fragility. This is the left's master plan coming to pass. Now, this is the first time 2 Fed governors have dissented in a monetary policy decision since 1993. Think about that. The statements from Waller and Bowman came just 30 minutes before the July jobs report was released, which showed the U.S. economy added a lot fewer jobs than expected last month. Bound to happen. I've said all along, the strategy is to destroy America. And Jerome Powell will own this recession if it happens. But Trump's smarter than that. Everything's going to be okay. ChatGPT maker OpenAI has raised $8.3 billion at a $300 billion valuation, according to the New York Times. The deal is part of OpenAI's broader strategy to secure $40 billion this year. Now, this fundraising round was oversubscribed months ahead of schedule. OpenAI initially raised $2.5 billion from VC firms in March when it announced its intention to raise $40 billion in a round spearheaded by SoftBank. The AI giant has planned to take on an additional $7.5 billion by the end of the year, but beat itself to the punch as investors clamored to get onto its cap table amid impressive growth. It's all about the AI. Big tech firms, Amazon, Alphabet, Microsoft, and Meta reported that they were set to spend as much as a cumulative $364 billion in their respective 2025 fiscal years, up from their prior estimates of around $325 billion. Where are they investing it? AI. Shares of three of the four tech giants spiked following their latest quarterly earnings reports over the past 2 weeks, which showed the companies broadly outperforming Wall Street's expectations and lifting their capital expenditure forecast. Meta and Microsoft shares surged roughly 11% and 4% respectively in yesterday's trading session, following their quarterly results that came out Wednesday afternoon after the FOMC. Microsoft's surge briefly pushed the firm's value north of $4 trillion for the first time. Only two companies, NVIDIA and Microsoft, have ever reached a $4 trillion valuation. Apple reported its fastest quarterly revenue growth in more than 3 years, easily topping Wall Street estimates after demand picked up for the iPhone and products in China. They reported after the bell yesterday. Now, the reason behind this is that those worried about the tariffs were stocking up on the iPhones. I'm talking about, the big guys, Walmart, Verizon, the wholesalers, okay? They're filling their warehouses with the latest iPhones. And Apple and its shareholders have benefited from that. Front loading. President Trump also announced yesterday steep tariffs on exports from dozens of U.S. trade partners that have not confirmed a trade pact in advance of the Friday deadline. About 40 countries that the U.S. runs a trade deficit will now face a minimum 15% duty rate on exports. Some U.S. trade partners will be hit with even steeper rates, such as 50% for Brazil, 39% for Switzerland, 35% for Canada, 25% India, and 20% for Taiwan. So, of course, the market takes a drop. That's okay. A healthy market needs healthy retracements. You know how long it's been since the S&P 500 has a 24% fib retracement? long time. But I'll show you that in just a few minutes as we go to the charts. Let's look at the local news. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis, but it's also crude, gold, and silver. Over the last 365 weeks, we have issued over 20,200 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on simple market structure and a simple process we teach all of our passport holders. Now, the logic alerts are published well ahead of them triggering. I was in a mentoring session once when someone said, "Man, those logic alerts are awesome." They were brand new. They hadn't even become a member yet. "Those logic alerts are awesome. It'd be incredible if you could publish them before they happen." I chuckled. I would say that the average time between a logic alert being published and it actually triggering is somewhere between 2 hours and 2 days. So, once the alert comes out, you've got plenty of time to get to your charts. And the real purpose of the logic alerts is to learn how to read a chart. So you're able to study the entry price, the initial target, the additional targets, and the final trade to target. As you repeat that process over and over, pretty soon, you're reading a chart like an old pro. Of course, you can trade them. Be hard to stop you, I guess. Now, this week, Valerie did the recap this morning at 9 a.m. Eastern. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 70 alerts. 3 never triggered. 2 of them didn't trigger because they were for the gold Q contract, which expired this week. We're now in the December contract, the Z contract. And the other one, price probably just moved too far away, or I might have duplicated it. I don't know. Anyway, out of the 70 alerts, we're still waiting on the outcome of 15. Some of them might have resolved themselves already. I have a feeling a bunch of them are long trades that probably won't resolve, but that's okay. We still had 52 actionable alerts for the week so far, and we had 2 that would have been stopped out. That's 4%. As I said, over the last 365 weeks and over 20,200 individual alerts, we've averaged 20% or less. So if this is how we end the week, no complaints from me. 4%. That's good. Now, the logic alerts have an entry price, long or short, an initial target designed to help you get your goal for the day, additional targets, and then a final trade to target. If it's a long alert, the final trade to target will be the weekly trading zone above. If it's a short alert, the final trade to target will be the weekly trading zone below. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. So, have fun, trade the alerts, but please make sure you use them for the purpose intended, and that's to help you learn how to read a chart so that you get to the point where you don't need these alerts. Because you can read the chart and you can see where the opportunity is yourself. You don't need me or anyone else to point it out for you. All based on simple market structure. Now, 365 weeks, that's a long time. But quite a few years before we introduced Logic 247, we had our original alert service, the concierge trade alerts. And they're different. Number one, they don't come out around the clock. They're typically published 5 minutes ahead of the Globex open. As I said earlier, the Friday session that we're in right now began last night at 6 p.m. Eastern. So all of our traders, and even our trial members, had all of these targets 5 minutes before the market opened last night. Keep that in mind when we go to the charts and you see the targets drawn on. If you are one of our traders, make sure you read this information up here and that you understand it. If you don't understand anything that's up there, be sure to ask, okay? So, all of our traders had all of these targets 5 minutes before the open. S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, we already covered what a big down day it was, or is, for the markets. So as we go through the charts, it's going to look like everything fell out of bed, which it pretty much did. So let's go to the daily chart of the S&P, where we always start. And look at there. We have been long overdue for a retracement to the BBC. That's the green line. Price always reverts to the mean. Now, BBC just stands for bull-bear cross. When price crosses below the green line, we're bearish and expect lower prices. When price crosses above the green line, as it did April 24th, we're bullish and expect higher prices. But again, price always reverts to the mean, and in our case, the mean is green. We call it the BBC. So when price pulls back to the BBC, the pullback holds more often than it doesn't, like it did here, and here, and here, and here, until we closed back above it. And the pullback held, and the pullback held, pullback held, and the pullback held. Now the pullback holds more often than not, but now this is really important. We traded below the BBC February 21st. And you can see what happened. We closed back above the BBC on April 24th. And you can see what happened. And where are we now? We are back below the BBC. Okay. Now, we closed below it right here. But then the next day we popped right back. See, the pullback, as long as it's still touching the BBC, then it held, right? So the question is, will we close below the BBC today? It would take an awful lot of buying pressure to move the needle back up to the BBC. So I'm pretty confident that we'll close below the BBC. Then the question becomes Sunday night at 6 p.m. Eastern when the markets open. Will we get a gap lower open or a gap higher open? I'm leaning towards gap lower, but we'll wait and see how we close today. Now, here on July 16th, we put in a low at 62.41. Today's low was 62.4375. Now this is what I mean by market structure, okay? Institutional traders, the ones who actually move price, they knew there was potential support at this low. We spiked the 50% fib extension. We've talked about how important that is. Now we're sitting right on top of it. But as we approached this low of July 16th, Buyers came in and bid it up. Now, this isn't a window of opportunity. I posted a ton of charts this morning in the discussion group as all of this was happening live in real time. And I was just illustrating where the market was most likely to find support. The number was 62.41. Buyers came in a little bit early at, come on, 62.43 3/4. So they came in 2 3/4 points early, bounced us up. Now, as you can see, this is a heavy market, so we very well could end up closing below the low of July 16th. If that happens today, the first trading day of the month, that means funds aren't loading the boat. And some say as the first day of the month goes, so goes the month. Well, we'll see. If we take out the July 16th low, the next major area for support, got a little support at 62.27 1/4. That's basically the same thing. But right here at the 38, that's roughly 6,200. Yeah, 6,200. That would be the next area for major support. This is the 24% fib extension down at 61.10. But the really important number is here, 60.93. That is the shallowest possible Fibonacci retracement from the low that was put in April 7th to the all-time historic high, which was put in yesterday, July 31st. We put in a new all-time historic high, and then we closed below two major areas of support. We opened last night, we attempted higher, and well, you can see what's happened. You see how important that 50% fib extension, not just because it's the 50% fib extension, but look at here. You see that all these lows across here? Again, that's market structure. And we're sitting right on top of that right now. We've been lower. Buyers, institutional buyers have tried to bid it up, but they're running into some headwinds. The daily chart is important, whether you trade stocks, futures, crypto, Forex, ETFs. Institutional traders, the ones who move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, spend 2 minutes with the daily chart of whatever you're about to trade on the smaller time frames. Number one, you get a free look over the shoulder of the deep pockets that move price, and you're able to identify where the market is most likely to find good support, good resistance. The high of the day is just below the black step line. That's potential resistance. Blue and climbing is now directly above price. That's potential resistance. And then, of course, yesterday's high, potential resistance. And that all-time historic high is 64.68 half. That's 2 ticks off. On the way down, we had potential support at the 62. We took that out. We had potential support at the daily BBC. Took that out. And potential support at the 50. I wouldn't be surprised to see us close right here, right where we're at right now. But there's quite a few hours left in the session. So There could be more blood in the streets to come. Write down the number 6,200. And then write down the number 6,110. And then write down the number 6093. This is the shallowest possible retracement. Now, the markets, they need rest just like we as humans do. A 24% retracement is a very shallow retracement. That's kind of like a cat nap. A 38% retracement, that's good rest. That's kind of like that long 2-hour nap you take after church on Sunday. I talked about this last night, and I wrote about it in the discussion group. What I'd love to see is price plunge all the way down to the 50. That would be like a good night's rest, where you don't even have to get up to pee once. That would set the stage for us to put on a very strong rally into the year's end. Now, Goldman Sachs, they're at 6,000. One of the other big banks, might be JP Morgan, they're at 7,000 for a year-end target. Currently, our year-end target is at 65.85, subject to change based on market behavior. So think about it. The shallowest possible retracement will have all the talking heads on TV running around telling you that the sky is falling, but it's not. It's the retracements that keep the markets healthy. Leg retracement, leg retracement, leg retracement, leg retracement. Now, for investors, obviously you don't want to see this. For traders, this is the thing of beauty. Because price drops much faster than it rises, it takes financial commitment for price to rise. All it takes for price to fall is for the institutional traders to hit pause on the buy side. And then price just naturally deteriorates. And that gets the attentions of the hedge funds who specialize in short selling. So then they come out of the woodwork and just pound it. That's easy money. Okay? So, let's hope we do get a 50% retracement. And then watch what happens. I don't really want to see anything deeper than 50. That could spell recession. Possibly depression. But a 50% retracement at this point, I mean, look how far we've traveled. Trying to get it all in the screen. $48.79 to $64.68. Hey Siri, what's 64.68 minus 48.79?
6,468 minus 4,879 is 1,589.
We've seen a 1,589 point rally. The market deserves a rest. It's not the end of the world. It's the beginning of the next chapter. My concern is that we won't get there. They'll keep trying to push it up until the whole thing just implodes. And then it could get ugly. And we don't like ugly. Okay. All alerts, the Logic 247 and the Concierge Trade alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose many years ago. And they say if it's not broke, don't fix it. Remember I mentioned that the pullback to the BBC holds more often than not? Here's a prime example. Now, the vertical lines separate today, Friday. Here's Thursday. Here's Wednesday. Back here's Tuesday. The weekly trading zones come out Monday morning at 6:15 a.m. Eastern. We've published the zones for our members for the last 15 and a half years. When price drops to a zone, we expect support. When it rallies up to a zone, we expect resistance until proven otherwise. And as we were falling yesterday, we found support at the zone here. And then from down here, going into the close, we had a green candle that ran all the way up to the zone. Now, these are the zones that were published this past Monday morning at 6:15 a.m. Eastern. We opened last night. This was the opening candle. And we came right down to the CTA short target. That's that list I just showed you a few minutes ago. When the market finds support, it will go look for resistance, which it found at the black step line. I sent it back down to the short target, where we ran into red and falling. Support will send the market looking for resistance. Now, right here, this high, not only failed to take out this high, but it failed to get all the way back to the BBC. That's a sign of weakness. So here we come back again to the short target. This time we trade through the lowest weekly trading zone. This sell-off over the last day and a half has put, I think, every one of the indices below the lowest weekly trading zone, and that is highly unusual. So we had a leg, a retracement, a leg, a retracement, the pullback held. Now this low, if we scroll way over here, you'll find out why that low is that low. In fact, I encourage you to do that over the weekend. I could show you, but wouldn't it be better if you just learned how to do it yourself? Now, going into the close, I haven't drawn any windows of opportunity lately. Selling 62.57 down to 62.47. That right there is a 10-point window of opportunity. And when you become a passport holder, I will teach you all about windows of opportunity. It's all part of market structure. I'll teach you how to find them, teach you how to trade them. Okay. The Dow. Yesterday, where did we find support? Going into the close at the weekly zone. Then we bounced. This was a big green candle, but look where it closed. This was the closing candle. This was the opening candle last night. Now, these are 30-minute candles. The second 30-minute candle hit the short target. Plenty to get your goal for the day. Then we bounced back up to the zone, came down, hit the target again, found support at red and falling. When red and falling gets directly below price, it becomes potential support because it's usually on its way to becoming blue and climbing. And that's bullish. Red and falling is bearish. Blue and climbing is bullish. And I'll say it again. The pullback holds more often than it doesn't. So down we come. This is the lowest weekly zone for the Dow. Now, typically by close of business on a Friday, even when we get below the lowest zone or above the highest zone, by close of business on Friday, that usually corrects itself. I don't think that's going to happen today. In fact, if the market insists on going lower, $665 down to $620, that's 45 points. It takes 20 points to get your goal for the day with the Dow. So what I got here, 560 down to 500, 490, 70 points. Now we're just about to enter this window. We'll take a look back at it before this broadcast ends. This is where the Russell opened last night. You can see where it found resistance yesterday at the zone. That's what we expect till proven otherwise. And then we opened last night right here. This was the opening candle. Made a move to the downside, but found support as red and falling got directly below price. Support sends us to resistance. The pullback holds more often than it doesn't. So we get a leg that takes us through the target and through the lowest weekly zone. And then as we come off this low here, pullback held. Held here and again here. Now we're sitting right on top of potential support. Also, you see that red and falling has briefly turned to blue and climbing. If we consolidate sideways, that blue and climbing is going to start to move up. But this market is so heavy. I think lower prices are to come. In Q. Oh, I showed a picture of this yesterday. The initial support that we found last night, right here, at 23,241. Michael's having some technical issues. Let me tell him, no worries. Now, how in the world could you know that the market would find support there? Remember, this is today Friday. This is Thursday. This is Wednesday. Every one of these vertical lines is taking us back another day. This bullish cross that was put in on July 23rd. That's when the blue line gets above the green line. It's called a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. You see it there, you see it there, and then we finally break through it here. And that takes us down to the lowest weekly trading zone. We bounce, but we don't quite get all the way to the BBC. Now we are officially below the lowest weekly trading zone on the NQ. But as price pulled up, look where it found resistance, at the zone. Crude oil. This is where we opened last night. That was pretty tough trading. Just a lot of sideways volatility. We did come down and hit the short target, which bounced us back up. But the bounce, we weren't able to take out this high right here. We finally took it out here, but as you can see now, we're finding support at 67.20. Now, these zones, again, were published Monday morning at 6:15 a.m. Eastern. And here it is Friday, and they're still doing their job. All right, we'll pick up with gold when I come back. Michael is here. He got in. He's going to give us a recap of what happened in the live training room this morning. Do a little live trading on the TradingView platform. I'll come back, finish the recap I was on, and wrap things up with our good word for the day. And as Michael goes through everything that happened in the live training room this morning and then begins live trading, on the TradingView platform, do not hesitate to type your questions into the question box. Okay. Your questions are not an interruption of what we're doing. Your questions are the purpose of what we're doing. Your screen looks good.
Excellent. All right. Well, let me get into it then.
All right.
All right. Good afternoon, everyone. Today is Friday, the first day of August, 2025. Happy August. So we had a pretty good day today, being the first day of the month. I just had to reboot my computer, so everything's going to be a little bit off, but not too far. There we go. That was last month, and this is this month. All right. First, let's go here. If you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com, click on the purple button. There is no credit card required for this trial. Once you click on that, you can be sent to this registration page. Just fill it out. Right? First name, last name, email, phone number. Down here at the bottom, make sure you give us a TradingView login ID. Hit that register button. Once you do, we will know that you took the trial. We'll be able to enable the indicators, so you'll have indicators indicating on your desktop for you, and all that. The results today. Today, the first day of the month, 8/1/2025. We're up 257 ticks on the NQ. We're up 2 on the Russell. We're minus 22 on gold and plus 29 on the ES. Now, none of those were the high of the day. On the NQ, the high of the day was 278. On the Russell, the high of the day was 32. On the gold, the high of the day was 4. And on the ES, the high of the day was 30. So we're 1 off on the ES. That was the closest to the high of the day. The other ones, I got quite a few stop outs toward the end of the session. Anyway, today it took 2 minutes and 2 trades to get to $2,750 with 10 contracts on, or 275 with 1. And I took quite a few trades this morning, 36. So first day, 1437. On the year now, we're at $174,532 over 131 business days, averaging $1,332 per contract per 2-hour business day. Over here, we were able to bring this up a little bit today over yesterday. You can see what it was yesterday because it's right here. We're at $49.54 average hourly rate yesterday. Now we're at $5,072. If you were to quit trading when you get the goal for the day and add 1 contract per month so far this year, you've only had to work 17.25 hours. You'd be up $87,492, and you'd be averaging $5,072 per hour. All right. All right. Let's get into the trades. We had quite a few trades today. The NQ had the most, so we'll just go from left to right again. All right. We'll start out with gold. And let's go all the way back here. All the way back here. Here we go. All right, our first trade on gold was right here. That was kind of a mistake on my part, and I should have had some profit in it, but I ended up with a -2. I kind of screwed that one up. I ended up with -2 on that. Now the next trade over here, we picked up 6 ticks that got us to +4. That was our high for the day. We stopped out on that one. That brought us down to -11. And then went from -11 to -8. So we picked up 3 ticks there. Then we stopped out again right here. I think that was another mistake on my, should have my stop at break even. Went to -23 after that. And then we got 1 there to go to -22. Now that's where we stopped trading, but that isn't where the trade stopped coming. All right. You can see anywhere the market, the midpoint was flat, came out of the overbought. Not anywhere, but almost anywhere where that happened would be a trade. There's one. There's one. There's one. Okay. And on the other side, coming out of the oversold where the midpoint was flat, there's one right there. And that was it. So every one of those trades was a profitable trade. Could have been a profitable trade. Should have been no less than a break-even trade. Okay. This one right here too. All right, pretty easy stuff. When I'm doing it in the morning, it seems so simple. Today, it was kind of wild right at the beginning. It was, the markets were all over the place. We stopped trading the NQ for a little while. Once I got up to, I think I was up to 113 ticks, no, 163. Once I got up to 163 on the NQ, I stopped trading the NQ for a little while. Just so I could slow it down a little bit for the people that are in the room, the new people who are in the room today. All right, so the Russell, you can see we didn't trade the Russell at all for a little while here. It's not to say that there weren't any trades, it's just that I was preoccupied with everything else. Our first trade on the Russell was right here. We picked up 10 ticks on that. The next one was right there. We picked up 10 ticks on that. Got us to 20. Then over here, we picked up 12 ticks. It got us to 32. And then we stopped out somewhere. Stopped out right there. I don't know how I managed to stop out on that because I should have been, I guess it didn't really go that far. But I stopped out right there and I went from 32 down to 17. Then I stopped out right here and I went from 17 down to 2. And that is where we ended the trading with the Russell. Again, that's not to say that that was where the trading ended, but that's where I ended trading it. There were more trades. There was one right here. That would have been a nice trade. That didn't actually come out of the overbought, so that wouldn't have been anything. This didn't come out of the overbought, so wouldn't have been anything. This right here would have been a trade right there. A nice trade too. The next one coming out of the oversold right there would have been a trade. This would have been a trade. This would have been a trade. This one would have given you profit. This one would have stopped you out. Okay, you would add another one to over here. Would have been profitable. Another one right there would have been profitable. You see what I'm looking at, right? When it comes out of the oversold and it closes on or above the midpoint. Comes out of the oversold and closes on or above the midpoint. The midpoint's going to be flat on the bar before. Okay, that's all I'm looking for. It's like this one right here. It wasn't flat the bar before. Didn't come out of the oversold either, but this one right here was too low. It was below the midpoint. If I blow it up, you'll see that a little better. Maybe. This one right here was below the midpoint. Right there. Okay. This one was above the midpoint. That would have been okay. Then you get into the red and you're looking for it to be like this right here. All right. Bar before is flat. This is the easy and obvious trade right here. Right. That one was one. This was one too. This one would have stopped you out. This was one. This was one right here. This was one right here. And this was one right here. Easy and obvious trades. Right. This was one right here. It would have been break even, I think. And that was it on the Russell. We ended up with +2 on the Russell. Right. On the ES, let's get back to the beginning here on the ES. Hang on. Back to the beginning here on the ES. All right. So right here, we had a break even. We started out with on the ES. Then we picked up 22 ticks. This is where we got the goal for today. Picked up 22 ticks on this move right there. And then we didn't trade it again for a while. We got a break even over here. Then went from 22 to 30. So we picked up 8 ticks there. We had a break even. Then we had a stop out. We went from 30 down to 20. Then we had a +8. We went up to 28. And then a +1. We went to 29. And that is where we stopped trading the S. Again, that's not where it stopped trading. That's where I stopped trading. This was a trade right here. This was a trade right here. This was a trade right here. This one would have stopped you. The other two would have been really nice wins. Nope. And what I'm looking for here is I'm looking for it to be coming off the midpoint, a flat spot off the midpoint, and this coming out of the overbought or out of the oversold at the same time. Okay, none of that is happening. It's just not happening here. All the way down through here. This was the first one right here. That would have stopped you out. This one right here would have been okay. That would have been a nice profitable trade. Could have got that stop out back. And that's it. That was it on the ES. So we ended up with plus 29 on the ES. Now the NQ had a ton of bars today, so I'm going to have to do the control back arrow. Get back to the beginning. Nobody's got any questions so far, so just hold all that thinking until I get back here to 9:30. Look at all those bars at 9:30. All right. So the market started out a little wild, as I said, right? And I didn't do anything with that wildness there. I was on the ES trade at the beginning. And right here, the very first trade on the NQ, I picked up 45 ticks on that. Then the next trade that I took, it seems like it was a long way, but it was only a few minutes later, was right here. I thought I got 45 ticks on that, but it turns out I did not. I got a bunch of slippage. 16 ticks of slip, as a matter of fact. And I ended up with 74 after that trade. And I thought I got 45 ticks on that. But again, I ended up with a bunch of slippage. And I was at 113 after that. Then this one right here, I went from 113 to 118, so I had 5 ticks there. Then I went from 118 to 163 after that one. Then I went from 163 up to 167, so I had 4 there. Then I went 167 up to 212, so I did get a 45. I got a break even there. I did get a 45 on that. Got me to 212. Then right there, I got a 4-tick win, got me to 216. Then a break even, then a 45, got me to 251. Then this I thought was another 45, but it ended up not being a full 45. It got me up to 278. Then break even, another break even, and then a stop out put me down to 253. And then I got 4 ticks right there at the end, put me back up to 257. And that's where we ended it on the NQ. Now, I'm not going to go over every trade that happened on the NQ during the break because you can see there were just a ton of them. But again, all you're looking for is to be closing above or below the midpoint, depending on what the background color is, when it is flat on the bar before the close, above or below. When you see that happen, then you go look at the bottom, make sure the slingshot or the trigger is right. Okay. And if the trigger is right, then that was a trade. And like this right here is what you look for right there. Okay, so that would have been a trade right there. Now, on the green background, you're looking for a close on or above that comes out of the oversold. So right here, it was flat the bar before. That would have been a trade. This right here was flat the bar before. That would have been a trade. Now you're in the red, so you're looking for the ones going down. This one right here would have been a trade. That probably would have stopped you out to the tick right there. This would have been a trade. That would have worked out. This would not have been a trade. I guess it would have. This didn't go into the overbought, so this would have been the last one you were working off of. So this would have been a trade right here, and that would have worked out. This would have been a trade right here. That would have been okay. This would have been a trade right there. That would have been okay. This would have been a trade right there. Long, that would have been okay. This would have been a trade right here. Good. This one here. Good. You guys seeing the same things I'm seeing? I mean, am I just wasting my time going through this? This right here would have been a trade. Okay. Obviously, that would have worked out. That would not have been. That would have been right there. That would have worked out. That would not have been. And that probably would have been right there. That would have stopped up. Okay, and the most recent one was right here. It's flat the bar before, that down close right there. This would also been one right here, so that would have been profit. That would have been a profit. It's pretty easy stuff, guys. The same thing again and again and again. So right here, if we got an up close on this on the Russell and then we got a down close, it would be a trade. Over here on the gold right now, if we got an up close on this, that would be a trade. Okay. I don't even have my CR. I didn't even have CR open right here for a minute. It's opening right now. Okay, my DOMs are almost up. Hold it. Connecting, connected. Okay, now I gotta open up the right chart book. Close that. Here, file. I had to reboot right before I came on. That's why everything was all messed up here. But I am back up right now and ready to trade. Here we go. All right. So we ended up with no trade there, no trade here, no trade here. And this was an actual trade here on the NQ that I just missed. This down close right here. Midpoint was flat. You got the down close below it where it came out of the overbought. That's enough to get the goal for the day right there. That one trade. It just happens again and again and again.
And once you get your goal for the day, you should put the mouse away.
Yes, especially on a Friday. Particularly on Fridays. You want to put that mouse away so you're not kicking yourself all weekend for giving it back. Jessica, are you in here right now? Jessica, she is not in here right now. She texted me earlier, but I got a whole bunch of text messages I guess. All right, we need to come out of the overbought right here. There.
Today's finally the 1st, so I can do that Sierra thing this afternoon.
Yes, you can go do the Sierra thing. Get that done.
You going to be around if I run into any trouble?
Probably. I won't be too far. I know there's some things that I have to do, but there's things that I have to do in the house. I got to go shopping. I got a lot of stuff I got to cook because.
Yeah, I just want to make sure I have it up and running by Monday.
Yeah, well, it's pretty straightforward. I mean,
yeah,
basically,
I think I can just walk through the process.
Yeah, you're just going in and signing up for exchange again. There's a down close on the NQ right there. Stop the break here. And it just took me out of break here.
And I have the detailed instructions how to do it.
In the TIQ video section, yep. Yeah, other people that aren't technically savvy were able to do it. So, like Lar, one.
I asked ChatGPT and it just laid out every step for me.
Yeah, it's pretty simple.
In fact, I think I copied and pasted that into the TIQ video channel. One of us did. Somebody did.
Yeah, I think I did that too. I did the instructions they gave me, then I did the instructions. I think I did the instructions that I came up with, and then I did what ChatGPT said too.
In fact, ChatGPT even told me that as far as your service with Sierra, that's based on whatever day of the month you sign up. But the data itself is, if you sign up on the 31st day, you're going to have to pay again on the 1st of the month.
It actually says it right on that. I read it.
Yeah. I was surprised that ChatGPT had that depth of knowledge as to. And I'm sure it just did a quick search and found it, but.
Yeah, it actually has it in text. I was looking at it last night when I was going through it with, I think it was Michael R. last night. He had questions, and I was walking him through it. And we're doing it by text, and I was taking pictures of it, and that was one of the things. I have it right here. So we had 2 break-even trades so far in this part. But that was Michael R. Here it is right here. And the thing that I sent him was this. I can show you too. Telegram it out to me. Hold it. We send. This Telegram stuff is just so. I don't know why it took so long to. Oh, I gotta sign into it again. There you go. Open that up. It's gonna open on the screen. Nope, it didn't. It opened on the other screen. Okay, this is what I had sent to him. This thing right here. It says right over here. Build 100 in full for each month, and for the next month, activated, non-refundable. It says right there that you know. So, if you would have paid the $39 yesterday, you'd have to pay it again today. Yep, and that's what ChatGPT is seeing right there too. But if you just wanted CME stuff with just the top of book, it's only $2. If you want CME with market depth, it's only CME with market depth, it's $13. But if you want all of it, full CME group, the CME, the CBOT, the COMEX, and an IMEX, then it's $39 with the market depth. You can get all that stuff, the CME with market depth, for all those things up here. You can get that for $13 a month if you just want top of book. If you just want CME. CME is just the indexes. But you and I both need this one, the $39 one. Other people, they don't really. Michael was able, I think he's able to get away with the $2 one because he just wants a CME.
Yeah, I needed the $39 one.
But what he was afraid to do anything to it. But all he would have to do is click deactivate on whatever he's got going.
Yeah.
And then activate on the one that he needs. And if he's going down in price, he's already got enough money in the account. So it shouldn't be an issue. But to get to that, that is all in the TIQ video section. Let me just show you. Right, if we go here, the TV in here in Telegram, Dwayne, and you go up here to where these links. Click on this link right here. Okay, and that's going to bring this up. I got to log in first and log in, and it's going to bring this up, and there it is right there. Okay, so this is the one that I have, and the ending date is now the end of this month, so they billed me for the rest of this month.
So I really just got to log in there and hit activate.
Yep, that's it.
Because I'm already logged in one of my browser tabs somewhere.
Yeah, that was it right here. It was the top one that I did here on. I'm sorry, it was the bottom one that I did on from July 23rd in TIQ videos. It was this one right here.
Yeah, I've got that running right now in one of my tabs.
Yep, just hit activate. It might force you to go make the payment if you don't have that ready or that set up, but you just have to go make the payment.
Right.
And that's all there is to it. It's not. I'm glad they sent me that stuff when I created the trouble ticket, because it was a little confusing at first, but after I did it about 10 times for other people, I realized, this isn't really that complicated. They just want us to refill out those agreements, make a payment. You remember, everybody needs to remember to go cancel the one that they have going on over at StoneX. All right, so here you see the midpoint's not flat, so you're not going to have a trade there. The midpoint is flat here, but you're too far away from it for a trade. The midpoint is flat here, but you're too far away from it for a trade. And midpoint is not flat here, so you're not going to have anything there. Now, as it pulls back, the midpoint will flatten out, right? Because you're not going to be putting in higher swings, so the midpoint's going to flatten out as it pulls back up, you see? Now it should go flat up here with an up close. It'll go flat up here with a down close. It's going to reset the midpoint. But with an up close, it'll go flat up here in the overbought. Okay, but if you get a down close, that means there it is, the new high and low start over again from right here. This is the new high right here. And that's why it reset the midpoint down to there. Okay, but it came out of the overbought right there. So there's no trade right there. There's no trade right here. This is going to flip the YVR. No matter what direction it closes, I think if it's hit the YVR, it's going to flip the YVR. So you're going to be looking at short trades here on the ES, not long trades. Okay. There was no trade here. And the gold looks like it's got potential for a trade, right? Look at the low of this bar. The low of that bar is 99.5. So what you do is you put a buy stop limit 10 ticks above that, right there. Right now, if it drops down, then that order is going to drop down with it. Make this on top. Still 99.5. Yes. So it's going to close right here at 004. That's where the bar is going to close. And it's going to come out of the oversold when it does close off the midpoint. So this is the easy and obvious trade right here. Easy and obvious. Okay. I don't know if it's going to work out, but it's easy and obvious trade. This is the one that I want to take all the time. It's the only trade you need to learn. There it is. We're in. So now, after it goes 5 ticks in profit, it's up to right here. I'll bump the stop to break even. If it stops me out, it stops me out. I've had a really good day, so it's okay. So far, I've taken 2 break-even trades in here, I think, in this session. Okay. And so we wait. And we don't have any trades developing. Oh, well, that went down quick. We don't have any trades developing over here yet on these. Okay, and it went right back up quick. All right, well, I'll just get ready to hit the break-even button here. It's just going to go up a couple more ticks. I'll hit that break-even button. All the indices are dropping, so gold should go up. One more. There it is, break-even. All right, I'll lock in 1 tick so I don't end up losing anything on this, hopefully. Slippage. And we'll see where it goes. It should go up to 1.6. Right here is where it should go up to. All right, I'm going to lock in more on this. There's 3 ticks. All right, and I'm out with 3 ticks. That is $300. 10 contracts on. We almost have a trade over here on the NQ. We almost have a short trade. We're in the overbought. It hasn't hit the midpoint. It's not going to on this bar. It's going to go flat in the overbought. But if this bar closes up, the next one could hit it with a wick and give you a down close and give you the trade right here. There's the wick. Now down close will work. Okay, down close on this bar will work. It's going to be at 87.75, I think. 86.75. 86.75. 5 points away from the top. Okay, so maybe 47 is what I mean. 47. Okay, now it's too far away. Now it's not going to be anything. I don't think. That would be right on the midpoint. So it'll be right there at 50. Down close right now at 50 would be a trade. Okay, if we get that, that's going to be the last one we take. And we did get it. And here it is. And that's going to go 10 ticks into profit. It just did. And I'm out at break even. Wow, that was fast. That was fast. So we got 3 ticks over here. And we got a break even over here. I thought we got 2 other break evens in this session. Maybe imagining that. Anyway, that is it. But you see, this is the easy and obvious trade. That right there was easy and obvious. That was right there was easy and obvious. I mean, you can see them coming a mile away. Because we use range bars, you can tell where the bars are going to close ahead of time. So you know whether you're going to have a trade or not. You know, like this one right here, it didn't close. It didn't get into the overbought. So you need an up close on this to get it in the overbought. And you need a down close on the next one to get it down below the midpoint. You know ahead of time what you're looking for. All right. Okay. That's it. For that, I'm going to wrap. Well, no, I could do it. If you haven't taken a free trial with us, go here to mytradingq.com, click on the purple button. There's no credit card required. Once you do that, go here, fill this form out down at the bottom. put in your trading login ID. That's all you need to do. If you don't have one, click on this because we only have these things on TradingView. Okay. And that is it. With that, we can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yeah, I was just setting up a mentoring session with somebody for next week.
Okay, excellent.
But I am ready. Okay, recap of the morning session.
Today it took 2 minutes and 2 trades to get to $2,750 with 10 contracts on.
Good job.
Thank you. Thank you very much.
Okay, guys, we're going to pick up right where we left off. We had just gotten to goal. Now, we did all the other markets in granular fashion, as we do. So if you missed it, you want to see it about an hour after I sign off, you'll be able to go to youtube.com/CFRN, and you can see this entire broadcast in its entirety. So gold opened here last night below the BBC, right at the weekly zone. When price encounters a weekly trading zone, only one of three things happens. 70% of the time, consolidation. 20% of the time, rejection. 10% of the time, the slice. Now, when price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. Okay. So yesterday afternoon, we had support, which bounced us up to resistance at the BBC. The pullback held. It holds more often than it doesn't. And then we had support going into the close, right at the zone. And this was the opening candle last night. And we did take a drop, which was plenty of opportunity to get your goal for the day, although we didn't make it all the way to the short target. We found support right off this little area right here. That bounced us back up to the zone and the BBC, resistance ×2. We consolidated, and then we tried to move higher here, but we ran into this previous bearish cross. That's when the red line gets below the green line. When you have a bearish cross that leads to an extended move, the first time price revisits that area. Now, if you look at the horizontal line on my cursor, you can see that the high of this candle right here is exactly where that bearish cross took place. First time up, you should expect it to be resistance. And it was. Sent us back below the zone. And we found support. Basically right here where red turned to blue. Okay. So we get back above the zone. We make a run at the long target. We don't quite get there. But again, this is gold. Now you're above the BBC and you have blue and climbing. So no reason not to enter on the open of this candle, which is 3345.7. So we'll call it 3346. So it ran up 9 points. Let's try that again. 46.55. Yep. That 30-minute candle right there is worth $900 per contract traded. Then we got a retracement. We didn't get all the way back to the BBC. Blue and climbing held as good support. So that sent us back to the long target, through this zone. Now we're consolidating at the zone. That is the second to highest weekly trading zone. And we've been consolidating there for hours. after this big move up, which happened at 8:30 this morning when that poor jobs report came out. And we just been wandering sideways. Blue and climbing's now directly over price. The step line has crossed blue and climbing. So what we expect from here is a retracement back to the BBC. When the step line cross, see on the way up, these two are parallel. Black step line, blue and climbing. But right here, everything changed. Step line crossed to the right side of blue and climbing. Now, it's possible buyers could run it up and we find resistance at blue and climbing directly above price. I think that might be a stretch, but you got to embrace all possibilities. And then you do have the potential for support here at the zone. I mean, it served as good support for hours. But if we break below these lows, look at the horizontal line on my cursor, if we break below those lows, then there is absolutely nothing to get in the way of price retracing back to the BBC. Now, I typically only use fibs on the daily chart, but just to give you an idea. The BBC right now is aligned with the 38% fib retracement. And that number is what? 3381.5. So call it 3382. Now that would be a counter trend trade. In the Logic 247 channel, there's over 20,200 individual handcrafted alerts, but every one of them is a trend trade as defined by the 30-minute chart, price, and the 30-minute BBC. Nothing wrong with counter trend trades, they just don't have the same high probability as a trend trade, at least as I see the market. Okay, so I know, because people ask me all the time, well, okay, you just said if price takes out this low, then there's no reason in the world that price wouldn't drop to the 30-minute BBC. And that's true. So does that create a window of opportunity? It does. But the Logic 247 alerts are designed to help you learn how to read a chart and to teach new traders the business of trading. And so, because trend trades have a higher probability than counter trend trades, that's why in the Logic 247 channel, every one of those 20,200 plus trades alerts are all trend trades. Again, as defined by the 30-minute chart and the 30-minute BBC. Now, if you were of a mind to short this, selling 88 down to 83, that would be $500 per contract traded. All right, so that takes care of gold. Here's silver. Here's where we opened last night on silver. We're below the lowest weekly trading zone. No, we're not. There's still one more zone way down below. On 35.30/31. So price gets below the BBC, blue and climbing turns to red and falling, and we come just shy. What's the low? 36.54. So we missed it by a penny and a half, it looks like. But that's okay, because this candle, you're below the BBC, you got red and falling overhead. There's no reason I know of not to sell the open of this candle, which was 36.69. And from 69, it dropped to 54. So that's $750 per contract traded. Now, getting out at the exact swing low or swing high, that only happens by accident or by luck. Okay, no one knows that's going to be the swing low until after the fact. But if you'll notice where this low came in, now the target itself was based off this right here, where red turned to blue. Buyers came in a little early, drove us up, and the BBC, it held and it held and it held and it held and it held. And then buyers, when that happens, buyers stop buying, especially the institutional buyers. And so we dropped. Overshot the short target by just a bit. It only takes 2 pennies in silver to get your goal for the day. So from this support, where buyers came in, and that's not a spot that, just reading a chart, that I would anticipate them coming in. It's just where they chose to come in. So your leg, retracement, the leg. So the pull back to the BBC held. Then we spiked red and falling, which is now support because it's directly below price as it's on its way to becoming blue and climbing. And it took us all the way up to the long target and almost to the zone. How close we get? Missed it by 2 pennies. Now, this zone was published Monday morning at 6:15 a.m. Eastern. When you become a member, a passport holder, you'll get the zones every Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Notice the pullback held, the pullback held, and look at this drop. The pullback held. The only issue I have here is we've now got red and falling overhead. So we pull back to the BBC, the pullback held, we bounced into potential resistance at the black step line. So if we get above the step line, then there is a trade opportunity up to red and falling. But I'm more of the school of maybe waiting for this. $37.16, $37.22, $23. It's $350 per contract traded. But most likely you're going to run into resistance here. And then price is going to be trapped between red and falling and the BBC. And we could just go sideways into the close. So let's take one last look at the daily chart. Okay, we're back down into that area where we're testing this low from July 16th. The July 16th low, 62.41. Today's low, 62.43.75. So we're just a couple points off this very important low right here. If we take out that low, then we should have potential support here at the 38% fib extension. Trade through that, then we go back to the 24% fib extension, which just so happens to be right above the 24% fib retracement. That's the shallowest possible fib retracement. From the low of April 7th to the all-time historic high put in yesterday. Now, yesterday we did not have an all-time historic closing high, but we had an intraday all-time historic high. Looks like the last all-time historic closing high. Let's see, we closed here at 64.28 We closed here at 64.24 half. So 24.5. So it looks like 28.25 is the all-time historic closing high. Oh wait, what's the closing price here? 25.5. Yep. Okay, so that's going to be it. 28.25. Now wait, where'd this guy close? Oh, we already did that. Okay, enough of that. One last peek at the ES. Okay, looks like it's frozen in time. I don't think it's moved since I drew that window. And my chart's not keeping time. Well, well. Let's do that. And do that. So the window hasn't completely filled yet. This was a 10-point window. So the top of the window was, what do we call it, 62.57 or 58, I forget. And the low was 62.50. So it was 7 points there. What's the low of this candle? 52.25. To see how that works, so let me draw the window in. Okay. I had to refresh my chart because for some reason it stopped receiving data. And we very well may still go to the bottom of the window. In fact, when you have a window of this size, 10 points, quite often price will go about halfway through the window, retrace back to the top of the window, and then complete the entire move. Yeah, that's a red candle back there behind where it says 10 points. So I suspect it will find its way down to the bottom of the window. Now, 2 points a day on the ES, that's your goal for the day. So this one window of opportunity here could be your goal for the entire week. The window we drew on the Dow filled nicely. We still have this second window, and price is working its way down there. I don't know if we drew anything else, did we? I guess we didn't. I tried that, but you guys wanted a string of numbers. So, string of numbers you shall get. Okay. All right. Let's get out of here. If you want to become a member, send an email to support@cfrn.net. Tell Valerie I want to become a member. She'll send you all the paperwork and a link to click so you can make your payment, become a passport holder. Then she'll send you a bunch of stuff. Don't create a folder in your email client, and every email she sends you, put it in that folder. Some of the stuff, when you first get it, you won't even understand it, know what it means. Oh, that's probably not important. Everything she sends you is important. Put it in that folder. And as you start to learn, etc., you'll know exactly where that information is. I mean, if you delete it or lose it, whatever, I mean, we can resend it. But if it's in the middle of the night or the weekend and you need the information, wouldn't it be better to just know where it is? So people always tell me, well, she never sent me that 2420 blueprint. Well, she did. It's like a form email that every new member gets. So you got it, but you didn't know what it was when you got it, so you just kind of shoved it aside. Anyway, when you become a passport holder, you're going to get 2 hours of live training in an interactive environment every trading day. On top of the 2 hours of live training every trading day, you have access to private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETFs, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening, typically 5 minutes before the Globex open. Monday morning, you'll get the weekly trading zones, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. So once you get them on your charts straight away before Wall Street even wakes up for the week. And every Thursday afternoon, you'll get an invitation to attend the members-only workshop on Thursday night, 8 p.m. Eastern. And last but not least, you get the golden key that opens all the private channels in Telegram. In fact, there's a workshop channel. It's got hundreds of members-only workshops in it. You need to watch them all? No. But Valerie usually puts a caption beneath the video, the recording of the workshop, that talks about the major points we discussed. So you might scroll through there and say, oh, yeah, I'd like to learn more about that, or I'd like to learn more about this. And so you can watch that video. But it's a great resource to have at your fingertips. A lot of years and a lot of time went into all those workshops. Lots of traders, lots of questions. It's just, a great way to learn. Everything a trader needs, all under one roof, on low price. And when you take the trial, you also have access to the trial channels in Telegram. You'll get the weekly zones, you'll get the Logic 247 alerts, you'll get the concierge trade alerts, you'll have access to the trial discussion group, so that you can ask questions that will be answered by our traders from the members-only discussion group, because they can see your questions. Most places will not let you mix and mingle with their current clients. So somebody might say something bad. We're an open book, so we do everything we can to help everybody who comes through our doors become consistently profitable in the markets. We provide you with the tools, the knowledge, and the support. Our support is literally around the clock. Now, you know what it's like when you buy some kind of software or get some kind of deal with somebody and you have a question, you got to submit a support ticket, and then you get a reply that says most support tickets are responded to within 48 hours. No, just hit us up in Telegram if you have a question. One of the three of us is usually lurking around, and if we're not at the moment you post the question, as soon as we see it, we'll answer it. Okay? So we're very hands-on when it comes to the support area. Everything a trader needs, all under one roof, one low price. I know a lot of guys and ladies, you've patched together this sort of a patchwork quilt of, this one place you used to be a member, they had this one thing that kind of worked, and this other place had this thing that kind of worked, and then you saw this other thing on the internet that kind of made sense. So you've tried to patch them all together. You don't have to do that here. We're going to give you all the tools you need. We're going to teach you the rules. All you have to do is learn how to read the chart, learn how to read the indicators, and then just follow the rules. The one thing we cannot give you is patience and self-discipline. And that's a very huge part of the equation. Again, that's why we give you a free trial with no credit card required, because you need to figure out if you have the patience and self-discipline to become a trader. We have no doubt that the strategy and the indicators work just fine. But you've got to be willing to wait for the proper setup to appear on your screen, and then not jump the gun, nor drag your feet, but take advantage of the opportunity. Got to be ready to strike when the opportunity presents itself. All right, let's wrap up this week with our good word for today. Yesterday, we talked about how do you handle fear. Today, a word to graduates. Seems a little out of sync, doesn't it? What's up with my thing here? Here we go. When you feel blah. Ever felt blah? Proverbs 29:18. Where there is no vision, the people perish. The word perish conjures up images of deterioration and decay, like fruit rotting from within. On what specific day does passion leave a marriage, or a worker lose interest in a job that once excited them? Like air leaking silently out of a tire, what was meant to carry our weight and to power us towards our destiny can now barely wobble. If that's how you're feeling now, blah, read this promise and let it take root within you. Jot it down. Isaiah 40:29-31. I'm going to read it to you, but I want you to meditate on it. Got it? Isaiah 40, verses 29-31. This is the New King James translation. Part of meditating on the Word and studying the Word, it's not just reading it, but digging into it, which means you might want to read it in a couple of different translations. You might want to do some word study. Look at the original Greek or Hebrew, whatever it was written in, Aramaic, okay? And see what the different definitions of those particular words mean. Sometimes you'll surprise yourself. So on with that scripture. He gives power to the weak, and to those who have no might, he increases strength. Even the youths shall faint and be weary, and the young men shall utterly fall. But those who wait on the Lord shall renew their strength. They shall mount up with wings like eagles. They shall run and not be weary. They shall walk and not faint. That's powerful. The great apostle Paul told his admirers, we too are only human like you. Acts 14:15. We're all made of the same flawed material. That's why we need God's strength and mercy newly bestowed on us each day. So, what should you do when you're feeling blah? Two things. First, if you're physically tired, Like the market I talked about earlier, rest. Second, think about how God's family works and stop isolating. The Bible says in Galatians 6:2, carry each other's burdens, and in this way you will fulfill the law of Christ. Fact is, you have given to others in times past. Now have the grace and humility to receive from them. You know, that was a difficult lesson for me to learn. It really was. When I went through my change of life at 37, I learned very quickly that it was better to give than to receive. And so I gave. And when you give according to God's will, He's got a God-sized shovel. As you shovel it out, He shovels it in. It's really an amazing thing. In fact, it's the one place in the Bible where God says it's okay to test Him. Now, one scripture, in fact, Jesus said when He was being tempted for 40 days by the enemy, he quoted a psalm, thou shalt not tempt the Lord thy God. But in Malachi, God says, here's one area where you can test me and see if I don't pour out more riches and abundance than you can contain. I mean, people want to stand near you just to catch the spillover. But back to my point. You've given to others in times past, but you must also have the grace and humility to receive from them. The first time somebody handed me a check, I was at a loss for words. I didn't know how to stand. I didn't know should I put my hands in my pocket? I mean, should I grab the check? Because I had always been on the giving end. But of course, we started a nonprofit when we built the orphanage in Kampala. And my wife and I were funding it out of our own resources, our business that we had at the time. But the first time somebody came alongside and says, hey, I want to be a part of this, they handed me a check, I almost didn't accept it. I almost said, well, that's very kind of you, but no, you don't have to do that. Well, thank God I learned that lesson real quick, because had I not, the orphanage would probably not still be standing today. There are people who are partners in the orphanage now that I've never even met. A doctor in Germany I've never met. He built us a high school. A woman from Colorado I never met. She built us a home for the little babies. I mean, the list goes on and on. But when Agnes and Chris first birthed the idea, or God birthed the idea in them to build an orphanage, they were caring for 11 orphans in their home. No running water, no electricity. I've been there, I've seen it. Nobody wanted to help. But when my wife and I stepped out in faith, now, we didn't have the educational background for this kind of a venture, and we didn't have a whole lot of money. In fact, we spent about what we had, all of it. But once we broke ground and we were able to start showing people pictures, the building going up and the happy faces of the children, people started coming with checks. Man, that's a good work. I want to be a part of that. So, yes, it's better to give than to receive, but make sure you know how to receive. And I'm not talking about just money, okay? Maybe you're great at giving people advice. How good are you at accepting or taking advice? And that guy's just trying to tell me what to do. Actually, maybe the Holy Spirit is trying to speak. How many times has the Holy Spirit just spoke to you in an audible voice? Probably never. How does the Holy Spirit work? Through other people. Now, the Holy Spirit lives in you. So you should be able to discern when somebody is speaking truth into your life and when somebody's speaking a falsehood. The enemy can appear as an angel of light. The last business that my wife and I owned before CFRN, everybody that came into my office looking for help, I thought God sent them. The enemy is so crafty. I soon realized that the enemy had found my weakness, a generous heart. And you're thinking, well, wait a minute, a generous heart, that can't be a weakness. It can when the enemy uses it against you. Because I noticed the same people kept coming back again and again with the same problem, looking for the same handout. And that's when I had to really do some praying. And the Holy Spirit showed me the enemy is trying to drain you of your resources. Physically, emotionally, spiritually, and most of all, financially, so that you won't be able to do good works. Because right now, you're a threat to his kingdom. Wow, what an eye-opening experience that was. And what an eye-opening experience it was for my employees. Many of them had never heard me say the word no before. I heard people talking out in the bullpen. What's up with Dwayne? He's changed. Yeah. He had a God-given revelation. I mean, for me to pay your rent one month or your water bill the next month, okay. But I'm not supposed to pay it every month. I mean, you're not learning from this experience. You're just mooching off the goodness of God. So I'm just trying to encourage you, okay? Be generous in your deeds, in your time, in your finances, but also be willing to receive. When somebody tries to speak truth into your life, don't get butthurt. Listen to what they say, hear them out, and then go into solitude, the quiet place that we talked about all last week, and talk to Jesus. And he will confirm beyond a shadow of a doubt if that person who spoke that truth, if it is truth, came from God or the evil one. We're always so quick to just make snap decisions and judgments, and as Paul said, he said, worry about nothing, pray about everything. Now, I'll be honest, I don't pray about which shirt I'm going to wear when I get up in the morning. If it's clean, if it's hanging in the closet, that means it's clean, so I just grab it and go. Okay? I know God's very busy. Now, if I was going to some kind of function that was really important, I might say, hey, God, help me out here. Help me put together something that looks respectable. Another scam likely. God, they just never run out of ways to separate you from your money. All right. Boop, boop. Yep, they just hang right up when you send it to voicemail. All right, I've held you long enough. Let me finish with this. Start reading God's Word. Listen to uplifting music. There is so much great praise and worship music out there today. And fill your space with praise. When you do these things, your focus will change and your faith will start to rise. That's our good word for today and for the week. Have a great weekend. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.